So very good afternoon, everyone, and thanks for joining in, and very warm welcome to the panel members as well. As we all know, small and medium enterprise constitute the backbone of any economy, and for any economy to prosper, this backbone has to be really strong. And if you look at some of the stats, 45% of the India's industrial production comes from SME. And they also account for 40% of the exports. And very interestingly, 40% of the employable population, which amounts to close to 80 million, is also employed by SMEs. And the criticality for this segment to grow is the availability of the capital or the money. Because that's the most important feed required to grow your business. And that's where we thought probably we'll have this discussion. And before I start, maybe a quick round of introduction by each one of the panel members, starting with Mr. Sanjiv Bajaj.
Yeah, hi, I'm Sanjay Bajaj. I run a company called Bajaj Capital. So we are quite young, we are going to be completing our 69th year. So, a lot of people don't know, today Bajaj Capital is known as a wealth management firm, but our base started with, helping enterprises raise money. The first project we took up was East India Hotels, the Oberoi Hotels in Zakir Hussain Marg. At that time, the same challenge was being faced. The banks were there, but they were not willing to lend. And that's how the whole instrument of companies' fixed deposits that all of you hear about was created at Bajaj Capital. We started with a genre of helping companies raise money, manage money, build enterprises beyond what they were able to raise from the banking system at that time. And then, we were amongst the largest debt investment bankers, raising a lot of funds for institutions. Then we pivoted into wealth management, and today we are amongst the largest mutual fund distributors, the insurance distributors, and yet we retain our investment banking ethos. And recently we have, reinvigorated these areas, and we have launched our SME merchant banking services again, because we were only working with very large institutions. So we have relaunched our SME merchant banking services. We are helping, even do small IPOs, 200 to 500 crores. And we are helping corporates restructure their debt. That's a separate team where, helping them get the right debt, optimize their debt, make it as efficient and as best as possible. So that's a long introduction to me.
So very impressive. I think I would not have done justice by introducing you to. So Mr. Mittal.
Hi everyone, my name is Ashok Mittal. I run this tech-enabled NBFC company called Prestloans. This is largely focused on MSME segment. Within MSME also, in fact, the first time, the micro segment. We are largely on the northern India side as of now in terms of operation. Very small ticket loans which we do for MSME for their working capital requirement. In addition to that, we are also somewhere at a very small size in ESG where in terms of supporting the green energy, financing the electrical vehicles. Thank you.
Hi everybody, good afternoon. My name is Bhadresh Pathak and I look after a B2B e-commerce platform for engineering goods, which is promoted by Larsen & Toubro Limited. The name of the platform is SuFin, which stands for Supply Chain and Finance. And you would be wondering that why a tech platform is there in a discussion which is related to financing. Well, every deal which happens has a working capital element involved in that, and finance is at the heart of it. So I am here. Plus, I have been a banker all my life. For about 27 years, I have been a banker dealing with working capital problem of MSMEs. So I am here for this discussion. Thank you.
Thank you. Good afternoon. Good afternoon, everyone. And I'm happy to be here today in this panel organized by Dun & Bradstreet. I run a company called iFinance, and this was founded by me about 8 years back, primarily with the objective of providing funds, working capital funds to unorganized micro enterprise players. So these are the bottom of the micro scale, if I would like to describe it. And this segment, like most of the micro segment, is bereft of funds from organized players like banks, etc. And this is something that iFinance has focused on. And in 8 years, we have given loans to more than 650,000 micro enterprises. And right at the bottom of the pyramid, people who are unorganized, not even registered in the government sites, etc. Thank you.
Good afternoon. I am one of the co-founders at Eco India Financial Services Private Limited. We started in late 2007. And we started by bringing access to banking to a retail store or a kirana, next door kirana shop. So customers could walk in and get themselves a bank account at a grocery store or a pharmacy or a telecom shop, and they could do their cash in, cash out transactions right there. Today the business has evolved and has pivoted multiple times. For us, we have ended up working very closely with 400,000 micro entrepreneurs spread across the country, through whom we have catered to 6 crore end or walk-in customers. And in our journey with these micro entrepreneurs, what we realized that they are some of the savviest people when it comes to money management. And I did not come from this background. I was a telecom entrepreneur before I started Eco, but for last 17 years, that's what I've been doing. And it has been super inspiring to work with such ambitious and aspirational individuals. So today, our mission is to try and become their preferred economic engine. And we provide 2 solutions. One is access to capital, where we partner with lenders who can give them loans. And the other is that we try and develop tools for digitization. And that's a big theme. A lot of cash gets generated in their businesses, so we are trying to digitize their cash. A lot of inventory isn't digitized, so we try and digitize that. And our business utilizes the backbone of the digital payment, digital public infrastructure, which has come about, loosely referred to as India Stack. So we put in a lot of effort in aligning ourselves with that architecture, where we digitize their identity, we digitize their payments, and then we are figuring out ways, because we sit on a lot of their transaction data, how we can leverage their transaction data, their digital footprint, and get them access to capital and create more tools for them such that they can grow their business a lot more efficiently. So that's what Eco has been doing. Yeah, thank you.
Thank you, Mr. Sinha. So, I mean, in the interest of the time, I think we'll get into the midst of or in the details of our panel discussion, where large part of discussion would focus on the risk assessment frameworks, the tech, how the tech is driving SME lending, and how government initiatives have worked or have not worked, what are the area of where we can improve. So to start with, my first question is with Mr. Mittal, that you have been a banker and now you have transitioned into an entrepreneur yourself. How do you see that this risk frameworks are really helping the current risk frameworks, which most of the lending institutions follow, are really helping to the funding requirement of the SMEs? Is there a scope where probably we can do better, or are these the really most developed or the evolved ones?
Hi everyone, I think this is a ever challenging question, by the way. How do you really understand risk, categorize risk and assess it? So I would like to divide into 3 parts and maybe try to explain one of them, and rest can be taken care by others. The risk assessment for micro and small and medium enterprises is, let's say, analyzed, assessed very differently. In our case, since it is a micro segment, we try to understand it by assessing the borrower entity itself, because these are the people who may not have too much data points available in terms of banking, GST data or any other such ITRs, etc., which are largely seen as assessment tools for most of the MSME units. So we try to understand it by alternate data which we gather from the customers in terms of understanding their either ability to pay or intention to pay. So mostly data is captured by looking at their profile, understanding their business, understanding their social environment, their family history, etc., to really know that these guys are able to generate enough cash flow for their business, and how this financing which will be provided by us will help them to grow the business. A couple of things which we are not able to really depend upon are, one is credit bureau data. So somehow I have some apprehensions about it, because credit bureau data is not really live streaming, so it is mostly delayed. If you look at 4 credit bureaus, the data is not same. Some of the institutions, especially if they have availed private financing, does not reflect in credit bureau. So the understanding of credit bureau is limited, that okay, whether the customer has a track record or not. In our case, almost about 30%, more than 30% people do not have a credit record, so we cannot really depend on that.
Yeah, and just to add on to this, like a lot of lenders today who have gone into digital lending,
Yes.
Your point is very pertinent that it may not show the private transactions, but you superimpose this with the bank statement analysis.
Yes.
There are a lot of, clarities you may unearth on a particular SME. And that's where I think the triangulation of data is helping. We also work with a lot of NBFCs where we provide triangulation of GST, bank statement, bureau reports. So I think that's pretty advancement when it comes to a small ticket size lending and when it comes to digital piece of lending. Moving on to my next question, which is to Mr. Sharma, Sanjay Sharma, is you're working more with the informal economy and very, I would say, an unorganized sector, and when it comes to lending to them, what are the methods, techniques that you particularly consider so that probably you are mitigating your organization as well? And that probably will help a lot of friends in the audience to understand the mindset of an entrepreneur or a lender while evaluating their risk and lending to an unorganized sector.
Yeah, thanks. See, we look at a customer base, which is, as I said, unorganized micro enterprise. So the typical data points that you want, and see, you need data to lend. I think no one has to argue that, that without data you can start lending. And typically to establish what is the ability to pay and what is the willingness to pay of the customer. Typically, the data points used are credit bureau data, which tells you the ability as well as the willingness of the customer, whether he's been paying regularly. Now, our customers typically are new to credit, so there's no data point that we get in most cases from credit bureau. Most of these businesses transact in cash even now, and therefore the bank statements reveal very, very little. They obviously don't maintain P&L and balance sheet. So how do you look at this and still underwrite? And I think that's the magic that iFinance brings onto the table, that we create points of surrogate data, you could say. And our method is that we look at the type of business or industry that the organization is in. If it's a grocery store, then what are the observable features that one can look at, the inventory size, the size of the shop, and so on. Which city is it located in, etc., to get a sense of how much is the total sales turnover, and we understand the margins in that industry to come to a profit number. So that is the way we solve for the ability to pay part. The willingness to pay part for micro enterprise customers, surprisingly, the willingness is very high. One may think that when you go to this customer, he's likely to be more likely to default, but that's not truly the case. And I think our lending to 650,000 micro enterprises has shown that the willingness is very much there. So if you eliminate the possible misleading data or intent to fraud, you will be fine. So I think underwriting this ultimately has to come down to some basic science, and the science is what data to look for each industry, how to interpret that, and then decide how much to lend and how to collect. A lot of that, I think in India, we are very fortunate that there are many data pipelines that have been built, whether you call the Jandhan accounts that are there, the JAM is there, we have account aggregators. So pipeline is all there. Unfortunately for the customers that I deal with, the pipeline is there, but there's no flow in that pipeline. So I think as time goes by, I'm sure that that flow will also come, and we'll start using digital methods primarily to underwrite. But today it is all about looking at the surrogate data and underwriting. I'll just take a question, but I think if you can.
So maybe, sir, we'll come to Q&A after the panel. So please hold your questions till that time. So, sir, I mean, rightly, and that's a message to the audience as well, because you represent the SME, and a lot of lenders today look at utility bills just to understand whether the intent of timely payment is there, and that's where I think a lot of financing decisions get taken up in the unorganized sector. So my next question is to you, Mr. Bajaj. You have the youngest organization, which is 60 years plus, and you would have seen the trends which are there in the lending, which would have evolved over a period of time. And maybe if you can help the audience understand some of the recent trends that you have seen.
See, let me start by the purpose that look, we want to build the entrepreneurs of tomorrow, enterprises of tomorrow, and that will only help if that will only happen if we have availability to credit. And today, credit is a huge problem in India. We want to do make in India. We want to compete with China, but China provides credit at 1%, 0%, 0.5%, 2%. So at the end of the day, we want an Indian enterprise who's paying 14%, 12%, or even if it's a great enterprise paying 7, 8% to compete on a global market. So that's a very unfair, disadvantage for the Indian entrepreneurs to have. The second is that there are two formats of funding. One is when you start an enterprise, and when you're already an established enterprise and you want to raise funds. Non-collateralized lending in India is a matter of saying you can raise small money, but major money is not available due to non-availability of collateral. Even if you are given a direct loan without collateral, an MSME is made to sign personal guarantee. So that means everything that you have built is at risk for one enterprise. So these are the things that need to be solved if you want to take our country to the next level. And, and one of the keys in this is credit insurance. One of the reasons why banks act the way they do, why NBFCs are not able to lend the quantum of money they can lend, is non-availability of credit insurance. And if there are any policy makers here, that's a huge area. If you bring in credit insurance, today you have a credit score, but that credit score is only being used to a next level. That needs to go to now next level, beyond that. A whole setup of credit insurance needs to be created in our country. And if we do that, availability of credit will go through the roof.
Yeah.
At one time, there were hundreds of companies which were able to raise corporate fixed deposits. Today, barely I can count them on numbers because there is a requirement of getting credit insurance, which is not available in this country. You need to have a rating. Yes, the customer should know where is he getting into, but solving these missing pieces will, open up more spaces of being able to raise money. Today, when a person raises the money for an enterprise, he has a dream. The only thing that should be checked that this guy is not a fraud.
Yeah.
But there are times when the businesses fail, but then that should not go to all his personal assets. His liabilities need to be capped unless he's done some fraud. That is a structure that is required in this country. So I think, but I have to say that, India next 10 years is fantastic because we believe in one thing which nobody else has, that's Jugaad. Okay, so we are able to find a way despite the worst of the problems, and I'm sure we'll find a way. So next 10 years is amazing for the Indian economy. If you are not invested in the stock markets, come to Bajaj Capital, open your mutual fund account. you'll make a lot of money with even the smartest people growing their companies, working for you. The point is, we are in a great place at a great time, but there are some small things that needed to be done, and then we can, just open up the market. And this is where, I think all of us now need to play our part in making these things known, demanding these things. Because, what happens is that, I was listening to Sidvi, there were so many great initiatives, there's so many, but a lot of people don't even know about it.
Yeah.
When we have started our own investment banking practice for the SME sector, my team realizes that half the time they're educating a person what is available, what to do, how to structure, how to file your returns. And that practice has not been created because everybody wants to go after the biggest one.
I think some of the pertinent things which you really mentioned is challenges for SME folks in terms of providing the personal guarantee, the collaterals, etc. I think that's the challenges which you see in the existing framework where, raising a debt for a SME becomes very, very difficult. And that's the reason I think there are a lot of small NBFCs and fintechs have come in. Yeah. And I think this is something very, very close to Bhadresh Bhai's heart. So maybe Bhadresh Bhai, if you would like to speak something on this.
Yeah, see, let us also look at the problem from the other end, like how a banker gets protected if he funds, right? And why lakhs and lakhs of, NPAs happen every year. And what is the root cause of this problem? The root cause of the problem is legal system in India, which doesn't give any protection to a creditor. So, even if you sell somebody goods on credit and take a PDC check, right, and the PDC bounces, it takes almost 2 years for any court to take that case into account. By the time your enterprise would have got ruined, right? So the biggest root cause of the problem is a very weak legal system which doesn't take care of the creditor, and therefore the financier always looks into some kind of a security, a fintech looks for data, banks look for a collateral, right? So unless you reform the legal system, nothing is going to happen. Second thing which is happening in India is all the large companies, they are actually working capital neutral. If you see all AAA rated companies, they survive on the working capital provided by the SMEs. Because SMEs provide them goods on credit, large companies pay at their own sweet time. In the meantime, this guy gets constrained. So my colleagues have been, the members on this panel have been talking about micro enterprises, very small guys who don't get access to capital. I would say they are in an enviable position with respect to cash flow. A vegetable vendor is much better placed than somebody who is supplying steel to an infrastructure project. Why? Because when you supply this, the guy who is into construction, when the government will pay him the money based on different benchmarks or different milestones, he will then pay you the money. And the cash flow is constrained. You would have to pay in 60 days, whereas the cash flow from that project would come in 90 days, 180 days, or something like that. And that is a mismatch. So even if you have plethora of data, and we have data, right? We are capable of creating data everywhere. So we are a very data-savvy economy. We can create data. There's no dearth of data. And using the data is also there. But there are two basic things. One is the law, and other thing is we need to reform the way in which we lend the working capital, right? Even if there is a collateral-free loan, right? You are asked for 5 years financials with a lot of projections, right? And then there are fintechs who would, okay, somebody was giving one example of a fintech which prepares this 5-year statement in a jiffy. Say in 59 minutes, these 5-year statements are prepared. But what then? What else? After that, the real problem starts that still the lender will never get that comfort, right? Because once you prepare these and say that my current ratio is going to be such and such in the year 25-26, would that make any sense to anybody, right? My debt service coverage ratio would be such and such in the year 26. Would that make any sense? Unless the method of working capital lending is revised by RBI, this is not going to change. because traditionally the bank have to rely on their submission of various forms which are considered for MPBF calculation. So here, a digital platform like us, what we do, we create trust amongst the dealing entities. We give data that, okay, ये आदमी आपको 60 days में करेगा ही करेगा, that's a historical track record, and you can trust. Supplier buyer को मिलाते हैं, एक mutual convenience होता है, plus एक trust होता है, and we have lending partners who come and pitch in with short-term credit, and that is going to be the way forward, right? So short-term credit के लिए they come into play, and that's how the whole ecosystem is helped. I mean, from the practicality angle, plus credit insurance, as Mr. Bajaj, I mean the person from Bajaj Capital said, is very important in India, which was stopped because of one bad incident of Paramount Airways, right? IRDAI stopped credit insurance, and that has got, I mean, that has come as a very, very big penalty for the trading ecosystem in the country. If we reintroduce the credit insurance, a lot of confidence is created. But first, and the foremost, is we need to reform our legal system. The laws for the creditors have to be strengthened. I mean, that is the root cause. Digital is everything that we can do. Yeah. But still, the confidence to lend will never be there.
No, very well said, Bhadresh bhai, and thanks that you empathize with bankers, because we should not forget SBI is our main sponsor for the event. So. So while we talk about the, the challenges that the SME faces, but we should also at the same time appreciate that a lot of SME funding comes from the formal segment still, which is banking and the large NBFC. I would like to then move on to Mr. Sinha, and maybe try to understand from you is anything that you can think a tailor-made solution can be relevant to an SME, or maybe from your world, what you feel can be done a little different to help the lower strata of the SME.
Thank you for asking me that question. I will go back a few years when we first started to get this demand from the micro entrepreneurs we were working with, that they needed access to capital. And when we went to the NBFCs, the typical response was that the bank statement doesn't have enough data. The bureau score is, or bureau presence is not there, or the bureau score is not adequate, and so on. But we were sitting on a lot of data which was showing that there is consistent behavior from this entrepreneur, and there is consistent economic activity being done on the platform. So that was one challenge. The second challenge, even with a small percentage who did qualify for a loan, the other thing which we discovered to our surprise was that they were not able to service a monthly installment. Only for us to realize that unlike most of us in this hall who are earning once a month, and a salary is once a month, it's a consistent amount on a consistent date, such is not their life, and that is true for 90% of the economically active individuals in our country. And so we created a mechanism where we said, okay, how about daily deductions? So we came out with equated daily installments. Then we realized that even this doesn't work for a few. It had to be made even more flexible. And what we started to use some of our data, which said that, okay, Mondays is their peak business, so let's deduct most on Monday. And then there is a weekly off, so let's not deduct anything on a weekly off. And then Sundays is the lowest, so let's deduct on Sunday the lowest. And that started to give us very good results. We have disbursed, so we do loans right from 1 day loan. So take it in the morning, return it in the evening or next day morning, right up to 3 years. We are not an NBFC, so we work with NBFC partners for this. And we devised a system where the NBFC, in their tech, they were not able to do daily or flexible deductions. So we said, okay, we will manage that, because these guys, and the proposition was that we'll make sure that these micro entrepreneurs don't default, and hence don't get into penalties and spoiling their bureau scores and so on and so forth, because there is a lot of presence of the bureau score today in the market. And so it was very important. The big learning for us was that all of our payment transactions, right from Bijli ka bill, Pani ka bill, TV ka bill, phone ka bill, everything is monthly. That's not true for them. They are earning daily, and so their cash flows are actually on a daily basis. So we said that we need to very closely align with the earning cycle. And that's where data comes into play, and these are still early days. We are still, I would say, scratching the surface. But just to share a number, we disbursed over 3,000 crore rupees, and we got back more than 2,999 crore.
It's very impressive.
Very impressive. So very clearly, is there willingness to pay? Absolutely yes. I think the products also have to be made according to really to match the earning cycle of this and the earning cycle of this customer.
Nice. Very impressive, I think, when you say such a large amount of money comes back, and when the audience or the borrower is the informal economy, it's really impressive. And I think we appreciate the work that you and your organization is doing. Moving on to my next segment is more on the tech development that has happened in the recent past, and how is it correlated in terms of access of capital to MSME and the SME world and the mid-sized companies, because a lot of audience would be looking to hear on that particular piece. So maybe Sanjiv ji and then Bhadresh bhai, if you can throw some light on this particular aspect.
Okay, with respect to the tech development, yes, say 5 years ago, you had to collect so many documents in physical form and submit it to your lender. So that is studies, and he took a sweet time of about 60 to 90 days to give the judgment when it came to a large working capital loan, right? And in the meantime, your chartered accountant would have to visit him at least 25 times to give response to various queries. Now what has happened is, because of the digitization and the digital stack on which we are sitting, and with the development of 5G and a lot of internet, which is available, the data is becoming like a public property in, certain aspects. Say, for example, if I allow a lender to access my bank statement for 1 year, which is of the main account, he can know my credit history immediately. And there are algorithms, there is artificial intelligence which goes into the fact that it can predict based on the bank statement behavior whether you will pay or not, plus how are your cash flows, right? It gives a depiction of that. Plus you can get the bureau score, it can get your history of the past behavior when you are in a formal economy. It doesn't help when you are lending in informal economy, but yes, when it is a formal economy, all these scores are also available through APIs, right? So the data gets exchanged between various agencies through APIs, and it happens in a matter of minutes. When I was in banking, say 15 years ago, even the KYC check which we had to do would take a few days. Whereas now, the KYC check can be done through DigiLockers in a matter of few minutes, right? So once you send it and you get a response, you know that, okay, just based on the PAN number, you can detect what is the GST number, right? Whether the PAN number is correct or not, right? You can get so many other things related to entity from the DigiLocker. So that is the digitization, power of digitization. And India has progressed a lot in this. We are doing much better than developed economies when it comes to the use of technology in handling the data. Yeah, and that's where we are making progress. That's where we are also, coming into the play where we are, a lot of platforms will come, fintechs will come, they'll be helped by data. And that's how it is going to help the SME ecosystem within the country. Yeah, and it is going to help the supply chain.
Your views, Mr. Bajaj?
Yeah, I think COVID played a huge role there.
Yeah.
Earlier, they were always, you couldn't do the whole journey online because there was some regulatory requirement. You needed one wet signature, you needed this, you needed that. And at the end of the day, what COVID did, it put the whole, in the whole ecosystem into an overdrive. Everything had to be made online. And whoever was standing in the way of anything was, found a way, found a solution which should have anyway been found. So today credit is available online to a great extent. So it's become much more faster. Today banks are working on APIs which they are providing, where you can do majority of the application online, and with the more and more data being made available. There are some privacy issues, but I don't think that should stop. If the data is going to be available, then this credit is going to scoring, and the mechanisms we want to run are going to become much faster. Like at Bajaj Capital, we help companies get credit, we help people get credit. So we have built up our own algorithms where we decide that this is a guy we want to lend to, or this is a guy probably this, he fits this NBFC's criteria better. He's more likely to get a loan there. So today you can do this. So I think there are exciting times. My only view is that let's not put any roadblocks there. Let's make all data available and make it as quickly as possible so that we can make transactions and loans and credit seamless.
Very rightly said. I think certain things on the digital lending were unheard a few years back, and the availability of data through online mechanisms has actually really facilitated. And I see a lot of my banking friends talking that any SME which comes to us, within a day we are able to turn around a in principle approval for them. So that's fantastic. Moving on to my next round of questions, and I'll seek views from Mr. Mittal and Mr. Sharma in terms of the government policies that have been there, because there's been a lot of impetus, and before this session we were hearing what Mr. R.K. Singh was speaking from SIDBI. What that you see is that the government doing right, and one thing that you see that government can really improve?
So I think first of all the steps which the government has taken, especially during COVID time, they have been very encouraging and supportive for MSME segment in terms of the moratorium being given and additional support being provided to the MSME segment. Similarly, they kind of gave a lot of support to the lenders as well by providing additional capital so that they could help and support the MSME. Having said that, I think there is still scope. One point which was discussed was in terms of credit guarantee, which is quite limited in terms of whether entities, NBFCs, in terms of having their membership in the institution, and then their eligibility criteria, their repayment method is, I think, need to be revamped a lot, because it is still not really covering the risk properly, considering the risk of the borrower entity, especially the micro segment. Second is still we have lot more dependence on rating. So people still go by ratings, whether you are investment grade or not. I guess on basis on the alternate data which is available nowadays today, that rating may be still not really something which is supporting. We have seen in the past that AAA rated companies were also not able to maintain their liquidity, etc. So a lot more emphasis has to be given to the current live data, to the future data, and the actual business which is happening, which may not be really created by a third party, but let us say, when I was talking earlier, we create our own score based on various parameters which considers financials as well as non-financial data points. Similarly, if government agencies, whatever are providing the support to lending institutions, they also consider, in that case, what will happen, the availability of credit will go up. Today, if you see, out of about 9,000 plus NBFC companies in India, maybe 400 or 500 are most active NBFC companies who are providing support to MSME segment. Rest all are not able to provide because they feel they themselves are not able to leverage, they themselves are not able to raise capital, so how they will provide support. So I guess lot more work has to be done by the agencies where the information can be more proactively provided, and work on maybe somewhere we need to move away from, I keep saying, on the ratings and on the credit bureau, and work on the current environment, how the data can be analyzed. Thank you.
Mr. Sharma, your views?
Yeah, I think in brief, I think what the government has done really well is they've created the infrastructure for data, or they've created it, or they've encouraged people to create infrastructure for data which can be used for lending. And I think examples were quoted, KYC validation, you talk of account aggregation where you can see your statements. Credit bureaus already existed, they become a lot more transparent. So government has helped in that entire journey, and I think that is the best thing they could do for the lending industry. I believe that the government should not get into too much of regulation of the industry, because this does not allow the market dynamics to take over and create a long-term health of the industry. Yes, there are problems. There are problems of the laws not being as robust. But despite that, the industry has done well. The lending industry is quite healthy and doing well. So government has done well by not trying to overstep and over-regulate, and that to me is a very big thing. The second thing that the government did was that it did step in when the times required it, and I think I agree with Ashok that during the COVID time, the fact that CGT MSC came in and gave some credit guarantee for loans, ECLGS program was made where 20% extra funding could be done for the companies which needed money at that time. I think government's role should be that in such difficult time they should step in with some stake, but overall they should let it be. And I think I believe the government has done well. The regulations that are coming in on digital lending, etc., protect the customer without overextending and making privacy such a big issue that no data is available and therefore no lending can be done. So I think we're on the right track there.
Thank you, Mr. Sharma. I think great insights, and I can see time is up. So maybe my last question to Mr. Sinha, and that's not there in the pack. So, and for the interest of the audience sitting here, if you were to be the MSME minister, just think that you were an MSME minister, what one thing you would have announced today that would have made our audience really happy?
That's a really tricky one. Ministers also get the opportunity to prepare for such an answer. But I think I think access to capital, and as I think who was mentioning, Mr. Bajaj was mentioning
the credit insurance
initially in his comments, where he was making the comparison with China.
Yeah.
Our belief in ECO, our conviction is to bet on this segment. We have, in our 17 years, we have pivoted multiple times, but our bet continues to be on this micro entrepreneur. And we believe that the access to capital is still very, very expensive. So, some way, if I was the minister, I would really push for the interest rates to go down, and small value, small duration loans to become really, really, truly possible, which is, I know it's there principally, but it is still not as much in action.